If you are looking to purchase your first home, here are some tips and tricks that will not only save you money, but also save you some stress in your first home purchase. A lot of first-time homebuyers go into this process without any information whatsoever. They dive into it and they go through major stress and they spend more than they need to because they aren't well prepared. These 5 tips and tricks will not only help save you money, but also save you unnecessary stress that you do not need to go through as long as you're prepared up front. After working with many first-time homebuyers and even second and third-time homebuyers as well, these are the top 5 strategies that I've found to help first-time homebuyers throughout their first home buying process. I'm really excited to jump into these strategies, but before that, my name is Josh Spector with the Spector Group here in Denver, Colorado. My focus is to educate and assist first-time homebuyers throughout the home buying process. If you'd like more content geared specifically for first-time homebuyers, then feel free to subscribe to our page below. So I personally am yet to see it, but maybe you have $500,000 in cash laying around for your first home purchase. If that's you, then congratulations, you can skip this part, move on to step 2, but most likely it is not. And in that scenario, you're gonna need a mortgage for your first home purchase. So what I want you to do is start with your big 3. Those are your 3 financial qualifications that lenders are gonna evaluate when they decide whether or not they're gonna give you a loan for your home. So what are your big 3? Your big 3 is your credit scores, your income, and your down payment. Lenders are going to qualify you based on these 3 financial qualifications. Any issues that you may run into on the qualification side are going to lead back to these big 3. So that's why I want you to critically evaluate where you are standing with these big 3 before you dive into your home purchase. If you try to just jump into it without your big 3 settled, then you're likely going to end up wasting time searching for homes, looking online for homes, and it's just going to lead to more frustration when you are ready to purchase. Whether or not you feel comfortable with your big 3 or you're not sure where you stand financially and you need some guidance, head to step 2 and begin working with a mortgage broker because they're going to help you through the qualification process and beyond. So now it's time for the aforementioned step 2, working with a mortgage broker. And this is the first step in saving yourself some money in your home purchase. I just got off the phone with a first-time homebuyer who went through our online loan application, and they were blown away by 2 things: our simplicity and our communication. They had been working with a bank previously, and the bank took 3 days to get back to them, and the communication was awful, and their loan process and their loan application was super difficult. So ours was a breath of fresh air, and that's what we as mortgage brokers strive for. The difference in service that they were receiving was night and day. I want to touch back on communication because that is a vital part of the loan process and the home buying process in general. If you're waiting on a bank to get back to you with your pre-qualification, or they requested more documents, you sent it to them, and now you haven't heard back from them, that can be the difference of you getting a home and not getting a home. If you see a home on Friday and you're waiting on your qualification letter, and then that home goes on Sunday and you're not pre-qualified so you can't offer on that home, then that's too bad. You just lost out on it, and that is why speed and communication is crucial when it comes to your loan and home buying process. So mortgage brokers are gonna be dialed in, they're gonna help get you pre-approved quickly, and then they're also gonna shop your loan, which is really where you begin to save some money. They're gonna take your loan, they're gonna look at your qualifications, they're gonna see how much you're putting down, they're gonna see where your credit scores are, and then they're gonna go to Chase, Wells Fargo, maybe some you haven't heard of like United Wholesale Mortgage or Quicken Loans, and they're gonna shop to find you the best rate and the best program that suits your financial needs. Finally, my last part about part 2 in why you should work with a mortgage broker is because they're gonna give you flexibility in your loan options. If you just go to a bank, like let's say Wells Fargo, I love Wells Fargo, but I'm just gonna use them as an example for this one. If you go to them directly, they're only gonna be able to show you the programs that they have available, where a mortgage broker is going to look at 5 or 6 other banks and show you all of the programs and find the one that works best for you. Now I have another great money saving tip that I'm going to get to at the end, but first is step 3. I want you to be open-minded with your home search. The process is not going to go exactly how you expect it to go. You may be thinking, oh, I've heard the market's a little bit cooler. I've heard that there are deals to be had out there. So I'm looking at a home, it's worth $500,000. I'm gonna offer $450,000 and I'm gonna get it because that's what I want. Unfortunately, it just doesn't always work like that. It depends on current market conditions. Yes, here in January of 2023, 2023, the market has cooled a little bit, but that doesn't mean people are just giving away homes. And that's not entirely the point of this section. I'm just using it as an example, and I just want you to be open-minded. So lean on your industry professionals because they're gonna show you what the market is like. They're gonna tell you about the current activity on a home that you're looking at, and they're gonna guide you on how you should offer on that home, how you should get your offer accepted on that home, and how you get into that home. Lastly, in keeping with the theme, you may think you know exactly what you want in a home, but if it's your first time, then you haven't gone through this process before and you haven't seen enough homes to know exactly what you want. Make sure you see plenty of options. Maybe you were set on a home because you want a backyard for your dog. But then you start home searching and you start looking at townhomes that are a little bit more affordable, a little bit at the lower end of your budget, and then you say, oh, you know, this has a backyard for me, this could work perfectly for me. I don't need a home at the very top of my budget because this townhome that I found has a yard and it works perfectly for me. So in this scenario, maybe you find that townhome for $400,000 instead of a home at $500,000. And maybe that townhome's in a little bit better location. There are always trade-offs in your home search, so make sure you see enough and you're open-minded going into it, because then you can make the best decision for yourself once you see all of these options that are available. And if you do find a place that suits you perfectly and you're saving a little bit of money into it, then take that extra money that you were gonna spend and roll it into an investment, or keep saving it maybe for your next home purchase or your investment property purchase. Last one here. Remember that you don't have to spend every dollar that you're qualified for. If you get pre-qualified up to $500,000, you can still buy a place at $400,000. It is just your starter home, so it's probably not gonna be your forever home. It is your initial home, you're gonna build some equity, and then probably move into a second home. Next is step 4, and I promise I'm almost to that next money saving tip, but this one should help you save a little bit of money too if you're smart about it. Step 4 is don't try to time the market. When I say don't try to time the market, don't wait until January or February of 2024 or 2025 because you think the market's going to be cooler, or you've heard something that maybe the market's going to be cooler then and interest rates are going to be a little bit lower then, so that will be the perfect time to purchase. If you have things that are impacting your life, like you're moving to Denver in a year, okay, then yeah, that makes sense. Wait a year to buy. But if you're simply waiting on the market to get to the point where you want it to be, then you might be waiting forever. Nobody has a crystal ball. Nobody knows where interest rates are going to be in a year, and nobody knows where the housing market's going to be in a year. All we know is where it's at currently. So if you feel like it's a good time for you to purchase currently, then jump on it. All right, now this is my number 1 money saving strategy. The one that I'm excited to share with you. This is number 5 of my tips and tricks. This is using creative financing. Creative financing comes in many different forms based on the market, based on where interest rates are, and I want to tell you about one that's very, very popular right now. That is a 2-1 interest rate buy down. Essentially what that's going to do is you're going to lock in a note interest rate when you close on your home. Let's say that rate is at 6.5%. If you utilize a 2-1 buy down, then you're going to be getting a 4.5% rate in the first year, a 5.5% rate in the second year, and then that 6.5%, that note rate in years 3 through 30. The benefit is it's still a fixed rate loan. You're not in one of these adjustable rate mortgages that are so dangerous, and you end up saving money in your first 2 years of home ownership. Now there is a fee to obtain a 2-1 buy down. And the good thing is it must be paid for by the seller. So the seller has to give what's called a seller concession for you to use this 2-1 buy down program. And in this cooler market that we're currently in, this is something that sellers are happy to concede in order for you to get your loan program, in order for you to buy their home. Now, if the market was in its craziness, its frenzy of 2020 and 2021, sellers wouldn't be inclined to give you this 2-1 buy down concession. But taking advantage of the market and where we are right now, this is a smart strategy to save some money in your first 2 years of home ownership. And speaking anecdotally, most first-time homebuyers that I work with are using this 2-1 buy down program to help them out in those first 2 years. And the best part about this is if interest rates drop, you can go ahead and refinance and get yourself into a lower fixed rate. And another little nugget, another creative strategy that people are using is down payment assistance. Now you're likely thinking of down payment assistance in the form of a grant or a down payment assistance program, and those are great, but I also want to mention one that you may not have thought of, and that would be using gift funds for down payment assistance. Now what are gift funds? Gift funds are funds that are from somebody else. It can be a parent, it can be a grandparent, a great aunt, a great uncle, whoever, that is going towards your down payment. So instead of you having to scrape together 5 or 10% for your down payment for your first home, they can gift you these funds for you to purchase your first home. It is worth asking the question because it could end up getting you into your first home. It may be the difference maker for you to purchase a home. Thanks for watching. Hope you found value in this video. If you have any questions or have any topic ideas that I should cover in my next video, please comment those below.